Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. So let's get to it. This, as usual, picture of the market, the S&P 500. And today is the last day of March. Huge snapback rally. That's the theme of the day. Snapback rally after extremely oversold conditions. Okay. We suspected that this might happen. The market is up today almost 3%, and it's approaching this resistance level that we mentioned here in the morning. If you guys don't know, here on my X page, okay, I tweet about certain things in the morning, and as you can see here, this was done about 7 hours ago. I'm shooting this around 4:30 p.m. So this was in the morning, and I said that any small catalyst would likely get these markets to bounce. The question is, will it last? That is up for debate, okay? And I mentioned how we can have a measured move in the S&P 500. Basically, if it cuts, we have a double bottom forming. If it goes above this neckline, we can get to this level here, which is like 652, okay? So you get these updates in the morning, which are my thoughts of what I think will happen during the day. Okay, so first, let's always go to the technicals. We'll get back to the snapback rally and what it means. But first, we always go to the basics and the technicals. Guess what? The technicals still bearish. This snapback rally still hasn't done anything. We didn't recapture the 650 level, which was huge. Okay, in fact, we reached it in one day, which is huge. Okay, but we're still in a downward short-term move. Okay, yes, we're in the middle of a bull market, and we have broken some levels here. But this is all due to the fact that there was a war going on, in case you didn't know. And levels don't matter when there's like a capitulation selling, okay? But it doesn't mean that the bull market is over, okay? In fact, the theme of the snapback rally is that if this move unwinds, if there is, peace talks and they happen to stick and there is peace, all this gets unwound, okay? And we'll get to that. But first, the technical picture, still bearish. And if we bring back the moving averages, we're still below the 200 and still below this key 652-ish level. Okay, these are not solid levels, they're like areas. So around 652, 653. Okay, so keep in mind, this really doesn't change the negative outlook for now. Okay, and of course, the sentiment, we always pair it together, still at extreme fear. We were at 10 or 9 before. After this snapback rally, we were still at extreme fear. Everything is at extreme fear, all the sum indices, except because of the huge rise in the market, volatility had a huge drop from extreme fear to neutral. Okay, so look, if you see here the VIX, okay, we dropped bigly. Okay, we're above 31. Above 30 is like danger zone. Okay, and we dropped bigly here. If it continues, if we continue to go lower, this looks like it might continue to go lower. Okay, if it does, we're still very elevated at 25. This can continue. If it's one of these things, we can continue to drop for months, okay? But that would require a fundamental change. And the fundamental change is the war ending because, it's still very elevated. 25 is still a very high reading. Above 20 is still up. We'll call that high, okay? So the VIX is telling us that, we're not out of the woods yet. Out of the woods yet, not even close. Okay, so snapback rally. Let's get to the theme of the day. Snapback rally, what's the big news? The big news is that the S&P 500 posts the best day since May as hopes grow for end of Iran war. I guess May of last year. As the hopes end for Iran war. What does that mean? Well, today in the morning, actually at around noon, not the morning, not when I tweeted this. This was like around 9:30 when I tweeted this thought for the day. This happened around noon, lunchtime, okay? So what happened? Iran president says they're prepared to end the war if they get security guarantees, okay? So, but it doesn't mean that the war is over, okay? They're still going to strike. You see, if you read all these sentiments here, you see the IRGC warns it will hit 18 U.S. tank companies in the region. Like, Palantir might be in trouble. Who knows? China, Pakistan issue broad 5-point framework for peace. So there are talks. France, Italy begin to block airspace for Iran-related U.S. ops. European Union doesn't want to be in this game. They don't want to be on the side of the U.S. They think this is an aggressive war by the U.S. and they don't want to have any part in it. Okay, and Hegseth here says upcoming days will be decisive. Strikes will continue. Regime fragmenting. All of these like moves. Okay, all of these like you're still gonna have the war going on. It's not going to end. I mean, just because peace talks are going, we could have peace talks going for a month, 2 weeks, and they'll still be dropping bombs like this. Isfahan, the home to much of Iran's enriched uranium, has been pounded by 2,000-pound bunker buster bombs. So this is just the fact that this slightly good headline is what got these overstretched conditions to snap back. So just nothing has really happened. They're just talking. Okay, this is a big if. Okay, nothing has really happened, but because we were so oversold, boom, you get this vicious like 3% move. It might not be over. We could still have continuation into the group, into the new month that is coming up, which is April. Okay, so what does that mean? If we get some kind of piece, we're not going to just get a snapback out. We're going to get an unwinding of the whole narrative. And what is the narrative? It's inflation is going to be high because of the war, because of oil. Okay, so let's get to the inflation front. We always look at the US 10-year as a benchmark, and as you can see, we're still stuck in this range between 350 and 472. Nothing has really happened. But in this whole move here is the move that happened in March, and it's inflation expectations. Inflation expectations are high due to rising oil prices. So this went up, but as you can see today, the past couple of days, it went down to 4.3%. Once the yield gets to 4.5, people start getting worried. But really, it's between 4.7. They should start getting worried. Okay, so this move is all the inflation move. It's a carbon copy, not carbon copy, but the exact opposite of what the market did. This is like a waterfall market. The SPY had a waterfall move down, and the US 10-year waterfall up, if you will. Okay, but this will get unwound if the war is over. This is going below 4% again. Okay, as it was like the rates were coming down because inflation was being contained. Okay, only after the war, boom, only after Trump attacked did it go up. Okay, so you can tell like everything gets unwound. We're going back to the old regime where inflation is going to be muted. You're going to have oil. Let's look at oil now. US oil down back to these levels because remember, downward fundamentals. The world was awash with oil before this move. Okay, so we're going to go all the way back down to 65 and 55 even in the US oil. Okay, and we mentioned yesterday that this bearish engulfing pattern was undone because of the fundamentals. The war was still going on, but it could be a trap if we get up. If it goes above and breaks it and then comes back down, it's very, very bearish. Okay, but that will happen this only gets done. The paint gets painted. The technicals get painted because of the fundamentals. So we have to have some kind of fundamental move in oil, not a drop of just 3%, a real move down 10, 15% in one day, and then a continuation for it to go lower. So this will get unwound. Gold, we always look at the precious metals breaking out now. That gets unwound too. No capitulation selling, no reason to sell gold by central banks like Turkey to raise money for anything, okay? And as you can see, gold is above the 4,500 level. It's at 4,673 right now as we speak. It's breaking back above these key support levels, okay? Very strong down move. This wiki candle looks like it was the capitulation bottom before going higher. We don't know what happens. It can just bounce around this up, between the 4,500 and the 5,000, but that's just like consolidation before an upward move, okay? But this puke might have been the end for the gold move. And of course, if we look at silver, its cousin, it was consolidating at the bottom and going up. Silver looks more like a double bottom type of move. If it crosses above here, the 94, like we can just mark it here so you guys could see. If it crosses above this level, the 94-ish level, which is the neckline of the double bottom, we're going to the highs of 117 again. Okay, so it doesn't mean it's going to happen. All of this might, get reversed if there is no peace talk and they start talking aggressively again. But if peace talks keep happening, you're going to see all this move, this entire down move here, unwind, go up. Okay, you're going to see gold go up. You're going to see US oil go down. You're going to see US 10-year yields go down. And you're going to see SPY. The last thing that we're going to say is go back up. Okay. And these levels here will have no meaning. It'll be like really a move up. Okay. So yes, think about it. If this war ends in the next 2 weeks or whatever, all of that is going to happen. It's not going to be a snapback rally. It's going to be reversal to the highs again. And that's why this down move, it's still not over. We're still in the middle of it. Nothing has changed yet. This is just hopium at this point. But if it continues, okay, that's what I'm saying. Everything is going to get unwound, and we'll be back in this type of scenario. Okay, because at that point, the thing that's going to really affect the Fed. Okay. Oh, and by the way, speaking of the Fed Watch tool. Okay. I'm looking at December 2026, so the whole year. Now there's a 70% chance of nothing happening, no change. But if you recall, this was the hike. There was literally yesterday or even last week, I know for Friday for sure, this was at like 12 or 15%. 12 or 15% chance for the year for a rate hike. I never thought that was going to happen. Probably not, because it would destroy everything in the market. But 15% now down to 2 in one day. This all happened in one day. So this gets unwound as well. This is all part of the same plan. It's all related, okay? And it's all because of inflation expectations due to war and, of course, due to oil. So let's see what happens in April, okay? Like May came in hard. Will April unwind this devastation? I don't know. Okay, but so far, it's a good light. It's a good little light at the end of the tunnel. All right, let's see you guys for April. Bye-bye now.